Hello everyone, welcome to the Ichimoku.co Daily Markets Review for the trading day ending Tuesday, January 26th. Firstly to the S&P 500, and here we've seen some solid buying coming back into the market today. Another white body candle, fairly similar size white body candle to 2 days previously. The market once again closing up above the important round number resistance around 1900. This is the second consecutive day of the last three that we've closed up above here in a bullish manner. The problem for the day prior was that we saw some fairly decent selling coming in, and the market was unable to maintain the close above that 1900 level. The next day tomorrow will be a good test for the S&P, and we'll find whether the market is favouring the buyers or the sellers. This bullish day followed by a negative day and another bullish day today just adds more to the more confusion and volatility to the market, and does raise some doubt about whether we are going to see this market rally significantly into this first and second time frame downtrend, when the market ended up trading down through the round number 2000. Now, having said that today, however, the buyers certainly were in the ascendancy today, closing up towards the high of this candle, and they have taken control and have shown some decent commitment by opening at the low and closing at the high. There is a small barrier of resistance around this 1922 level up to about the 1925 region. And if the buyers are strong enough to close up through there, very good likelihood of a test up to the Kijun-sen indicator around 1946, 1945. Interestingly, the Kijun-sen is pointing flat. Price action tends to be attracted back towards a flat Kijun-sen. But if we look at trends in terms of Ichimoku, the market remains fairly strongly bearish in the longer term time frame by trading below the Ichimoku cloud. Also bearish in the medium term time frame by trading below the Kijun-sen. But we are now once again returning to a positive trend to the upside in terms of closing above the Tenkan-sen, the green indicator here. The Chikou span is below the corresponding price action. It is well below the corresponding price action, and it suggests that the market is just looking a little overextended in terms of that momentum to the downside, and suggesting a good possibility of us seeing the market continue to trade higher. But we will need to trade through the highs around these three candles and close in a bullish manner up above there if we are going to see the market test up to the Kijun-sen. Today the market has also changed trend to the upside, forming a higher high and a higher low on the current candle, and just using the Fibonacci extension tool and looking at some areas where we may see some potential resistance coming into the market. The first is the 38.2% level, very close to the highs around this previous swing high, and just above there it trades at 1912. The 50% level is very close to where we saw the market retrace from the this previous area following the very strong downtrend and retrace back up in a mild manner. That's around the 50% level there, around 1924. The 61.8% level is at 1935, and the 78.6% level is very close to the Kijun-sen indicator. So these are the areas we should be watching, and this is based on the relationship between the first time frame uptrend and the immediate previous first time frame uptrend. Next, taking a look at our bands, and this really does show how dramatic this downtrend in the recent past for the start of this year has been. Previously, if you recall, we were watching all through this area. We saw the market test up above the upper band, highlighting strength for this uptrend. The market then testing down below, and the rally failed to penetrate through the upper band, and it suggested, if we recall at the time, that there was potential for a new downtrend, and that's the way that we see markets transition from these uptrends into downtrends. When the market intends to rally back up to these regions, we don't see the same follow through the upper band. We then tested down below the bands again, and then testing around the middle of the bands and back up to the upper band, and then selling off quite strongly. We were also always going to watch the swing low here, and we did trade down through there in a fairly strong bearish manner, and then we saw strong follow through with the market trading down below that lower band, signifying a very strong negative bias to this downtrend. For the last couple of days, the market has attempted to trade back within the bands, and the bands are very wide, and it's suggesting that we certainly have a very strong likelihood of the market mean reverting back towards the middle of the bands here around 1948, 1949. We know that volatility, and that's represented by the width of the bands here, the volatility is cyclical, and with the bands being very far apart, it's likely that the bands will now start to squeeze up, and price action will tend to manifest itself as either congestion, which is what we're seeing at the moment, or retracement, and we have seen something of a retracement, but over the last couple of days some congestion. Importantly, for the day prior to today's trading, we saw a bearish breakout back down below the lower band, but we didn't see any follow through. And this is suggesting that there is a possibility that this strong downtrending price action may be over, but we do need to watch that lower band very closely as support, 1878.54. If we see a strong bearish breakout and then strong bearish follow through, we could see that downtrend resume. So very important trading, but there is a very good likelihood of the market testing up back to around the middle of the bands, and we should watch that area for resistance, so we do trade back up to there. Moving next to NYMEX oil, and this has been a market that has sold off very significantly in the recent past. The Ichimoku indicators were all very negative for very long periods of time, and since November we had the market trading down through the Ichimoku cloud and down through the Kijun-sen indicator. All through this period the market hasn't traded above any of these indicators. We have seen the market test above the Tenkan-sen for a couple of trading periods, and then strong selling return back into the market, and that's what we're seeing here at the moment as well. For today's candle, we've seen formation of a very small white body candle, and it's suggesting that we haven't seen the strong downside momentum that we saw for the previous black body candle, but importantly the market has attempted to retrace back towards the equilibrium as suggested by the Kijun-sen, and we've found resistance there for the prior day's trading, and for today's trading we've traded very close to there. Importantly for today's candle, a large shadow on the top of this small body suggests that there's been very strong price rejection from very close to the Kijun-sen indicator, close to this $32.80 previous level of support and resistance, and the buyers have failed to take control of the market once again, and the sellers have continued with control, not as strong control as we saw for the previous day's trading. Importantly, however, the market has failed to close down below the Tenkan-sen indicator, and that trades at $30.15, and the close above there suggests that we could see the market attempt to trade higher, but we still do need to watch the 31.42 level. Also important is the 29.54 level, around that $30 round number, and the market has found support for the past 3 trading days just close to and just below that area, 29.54, and that's an area that we do need to watch very, very closely in the future. Now, just looking to our patterns here with NYMEX oil, and there is potential for an inverse head and shoulders pattern to form. Here we have a potential left shoulder, a potential head, and if we do form a lower or a trough here, and the market rallies up here to the neckline, it will suggest that we have formed an inverse head and shoulders, and suggest that we have a likely target up around the $37 level approximately if the market does break out over the next few days. There's no guarantee that this pattern will form, but there is certainly a left shoulder and a head that may have formed here, so we should be watching this neckline here for a close above there and potential for the market to trade higher. A lot will depend, however, on how the market reacts to the Kijun-sen indicator around that 32.98 level, and the market will test that area before we do test the neckline. And just looking to the bands here with NYMEX oil, and the first thing to note is how the bands highlight the cycles in volatility. The bands move from being squeezed to widening, then to squeeze to widening to squeeze to widening, and it certainly does look as though the bands are going to squeeze together again. We have seen strong bearish bias with the market trading down below the lower band. We have tested back up to the mean reverted, and the middle band is holding as resistance, and that's really the area that's going to be important. The question is, will the market be able to trade up through there and then eventually trade up through the upper band? At the moment, there's no hint that that's going to happen. Here previously was a perfect setup for continued short trading activity, the market testing to the upper band here and then selling off back down through the lower band in a bearish manner, and there is a good likelihood of that continuing again. Having said that, however, the bottom band has been holding as support, and there is a hint here that the market may transition into an uptrending phase eventually, and we could see an end to this strong downtrending phase. But whilst the middle of the band here continues to hold as resistance, we're not going to see the market transition at the moment. We could see the market test back down through that lower band, and if we do see the market test through in a strong bearish manner and the swing low at 27.56 taken out, we certainly could see further strong downside activity in NYMEX oil. Looking next to gold futures, and here we see fairly bullish trading in gold, and gold certainly has made a fairly strong recovery after it was trading down the around the 1044 level, finding very strong support there. We were seeing strong resistance coming in a couple of times around this 1084 region. Then the market traded up through there in a strong bullish manner to end up trading within the Ichimoku cloud for the last probably couple of weeks or so. We then ended up trading up through the 1100 round number level of resistance, testing up through there and into this highlighted yellow zone of resistance. And for today's trading activity, a couple of important events. Firstly, we've traded through the top of that highlighted zone and also through the top of the Ichimoku cloud. Now what we want to see here with this strong bullish breakout above the cloud is some strong bullish follow through to confirm that the market has transitioned into an uptrending phase in the longer term time frame. Importantly, we have closed up above a flat part of the cloud, and often when we see these breakouts through a flat part of the cloud, we can see false breakouts, so we want to see some strong bullish follow through to confirm. Also, I'd like to see a strong bullish close up above 1124.3, and if we see a few days of strong bullish activity, we certainly could see the market end up testing to about 1133.9. And looking to our bands, and this really does look very much different than the other markets that we were looking at. With the equities market, we saw this type of trading activity down below the lower bands and then trading within the bands, also with NYMEX oil. But here we've seen the market for gold transition into an uptrending phase, and we previously the strong bearish activity, the strong bearish bias, strong bearish sentiment with the market trading down below the lower band, the market rallying up to the upper band, finding resistance, then testing down to the lower band and not trading down through there in a significant manner, testing to the upper band again and finding resistance, down to the lower band in a bearish manner but failing to test down below the previous swing low, up to the upper band. And then the important thing was the lower band holding as support, the market then breaking out to the upside above the upper band, rallying in a bullish manner, retracing and finding support around the middle of the bands, and then further bullish activity up above the upper band. And this suggests that gold futures certainly has transitioned into a strong uptrending phase, and suggesting that we could see continued strong bullish activity for gold futures. The next thing to watch over the next couple of days is for support to come in once again around the upper band at 11.0.